Hi, my name is Bruce Burnett, and been looking at markets and trends as well as the weather situation globally for the last 30 years or so. This map that you see right here is map of the last 30 days percent of normal precipitation across the prairies. I did a bit of a crop tour coming into Saskatoon here, and I can verify some of these red areas. Again, those red areas are less than 40% of normal precip over the last 30 days. So a lot of Manitoba, some of southern Saskatchewan, and into southern Alberta below normal. The rest of the prairies within normal range, essentially, over the last 30 days. That's critical in understanding this year's crop. Especially the areas in south central, southwestern Saskatchewan, and into extreme southern Alberta. All of those areas are very, very dry. Crops are very poor. There are some areas that have received some scattered rains here, but basically crops in those areas are looking below normal right now. Manitoba is a bit of a mixed bag. Some of the areas are dry. Manitoba does need moisture. In fact, all of the prairies need moisture, but the crops look better in those areas because they've been living off of the stored soil moisture that they've had going into this spring. The key is that in the southern areas, those crops are going to be the most affected. So if you think southern Saskatchewan, southern Alberta, it's Durum. So our Durum prospects this year are down. We're just looking at the crops and the crop conditions, the yield potential of those crops. We were talking about probably 2.5 bushel an acre lower than last year. So this year we increased our Durum area. We're supposed to have a big whopping crop, and we're actually going to end up with 400,000 tons less Durum than we had last year. So that's important to think when we think about the Durum market, because the grains outlook, quite frankly, isn't all that great in terms of pricing. But Durum does have the potential here, especially on the demand side. If we can see the demand from the Mediterranean basin pick up here, we've lowered our stocks. We had a good export year for Durum. If we repeat that again this year, probably see strengthening prices of Durum through the growing season through the marketing year, post-harvest into, let's say, the middle of March, end of February timeframe. For the crops that are growing in the central and north, things look pretty good. Barley yields probably at last year's levels are a little bit above. We're saying a little bit above last year. The spring wheat yields, same story, a little bit above last year, but not much. So in those two crops, we planted less area, certainly in spring wheat. We planted a lot less area, planted a little bit more barley. So we were expecting a big drop in spring wheat. That's going to be modest, sort of on the line of how much less spring wheat we planted this year. The final crop I sort of want to talk about is canola, and that's basically the tariff issues are probably the biggest concern I have in the canola market. We're looking at yields in canola approximately the same as last year. Last year, at this show, it looked really, really good for the canola crop. It looked good for all crops. And then after the show, we had 6-8 weeks of dry, hot weather, and things just went downhill in the prairies. This year, the positive side for canola is that the forecasts right now look to be fairly moderate in terms of temperatures. Not cold, but moderate temperatures, sort of closer to normal. Not those blast furnace temperatures that we had last year, and a little bit better chance of moisture. Probably mostly scattered rainfall, but still, any rain's good rain. Doesn't matter if it's scattered or general, just as long as we fill in some of the dry pockets here. So for canola, we're looking at a smallish crop. We have, a little bit lower than last year because of smaller area. And we've had strong demand for canola. Canola demand has been very strong. So really prices should be very positive. Unfortunately, we have these tariff issues that are a concern for the market. Has not impacted the demand yet, but it's something that we need to keep a very close eye on. The tariff issues that we have, the questions we have to answer is China going to put a tariff on our canola seed? I think probably not, because they actually do require the canola. The canola makes sense for them to crush this year, so I think they'll continue to be strong, have strong demand for Canadian canola, and probably this tariff thing will go away unless a new trade issue flares up between Canada and China. The other concern is with the Trump tariffs. If they go into effect and hit our products, oils as well as meal, those products, U.S. is our primary customer for a lot of those markets in terms of export. And so therefore, that would certainly hurt the domestic crush situation. So that's a big concern for the canola market. I don't think either of those tariff situations play out. I think possibly cooler heads will prevail at the end. We'll get a trade agreement with the U.S. We probably will be able to trade agricultural commodities like grains, pulses, oilseeds fairly freely. So I don't think it's a big risk, but it's still a risk there, and the market's taking it into account. The fundamentals of the canola market are good. We have increased in demand from biofuels. The vegetable oil market is fairly high right now. We're trading nearby contract 54 cents a pound on soybean oil. So when prices are in that range, we should be trading canola in the new crop contracts in that $700 to $750 range. So I think that that's probably where we're going to end up trading for the most of the next 6 months. If we have any problems with our canola crop over the next little while, and the production drops even further, the prices could even go higher. My recommendation, though, is on canola, is that really on market rallies, we should start pricing some of our canola out here because of the risk. That's strictly because of the risk that we have. I'm no politician. I don't understand the tariff game here that's being played, but I certainly know that there's risk involved there. So probably it's better to take the cash when prices get better. So anyway, that's the recommendation there. For the grain sector, as I said, Durum looks okay, but for wheat, we're going to be influenced by very, very low corn prices. The U.S. corn crop is large. My estimate right now is that we're going to see yields in the just under 190 bushels an acre for that crop. And that's going to result in a huge push of corn into southern Alberta, into central Alberta, even into the east, into Manitoba in terms of the feed markets. So that's going to pressure the grain sector. Barley is going to be influenced by this, obviously, so because we're going to see less feeding use, because prices on the board, like the Chicago Board of Trade, we're looking at prices probably hitting lows around the $3 a bushel mark for corn this year in the December contract. We may not spend a lot of time there, but that's where we're probably going to be trading. So we got close to $1 a bushel here to lose in the market over the next while, unless a problem develops really quickly. That also influences wheat, especially the spring wheat prices, because the spreads right now between wheat and corn are getting very, very wide. And again, in a market like wheat, there will be a tendency to narrow that spread as we get through the harvest period here. The U.S. harvest has already started. The winter wheats are coming off. They've been under pressure, but spring wheat, we're now starting to see that pressure in the market. So for instance, today, Chicago wheat was higher, but spring wheat in Kansas City wheat fell. So that trend has been going on for about a couple of weeks, 3 weeks now. and that's going to just continue on here, I think, in through our harvest. So in terms of wheat, we're probably looking at a flat to lower trading environment unless we get some help from offshore somewhere. The only potential area that I see is Australia. Western Australia is in a severe drought, probably looking at a crop about 5 to 7 million tons smaller this year in Australia. That should help support wheat prices on the back end. But for here, for now, the Black Sea's harvesting, Europe's harvesting, the US is harvesting. We're seeing a lot of pressure in the wheat markets. Everybody's saying, where's the demand? We don't have any demand. The one thing I would say going for spring wheat is we're seeing very strong demand. Second year in a row, we're hitting a wheat export record in Canada. So in other words, we've exported more wheat this year than we did last year, which was a record. So that's the good news, I guess. The bad news is that I don't think prices have a lot of impetus here to go higher unless we see developing like that Australian drought turn really bad, or conditions in Argentina get bad. And again, those crops are just being planted and they'll go through their development cycle and won't be harvested until December. So we won't know the results, I guess, essentially of those harvests for at least 2 or 3 months. So with that, that's my outlook. Fairly negative on grains, fairly decent on oilseeds if we don't get any tariff issues.